Now to our market monitor. He has names of stocks that he says are reasonably valued in a market that he says is a little bit on the expensive side. This is his first time joining us on the program. He is Ernie Cecelia, Chief Investment Officer at Bryn Mawr Trust. Ernie, good to see you. Thank you for joining us tonight.
Thank you for having me, Bill.
We start with JPMorgan Chase. I mean, clearly the banks have suffered. This is not the environment for them, but why do you pick that stock right now?
Well, we see the economy expanding at a sufficient pace to improve loan demand, and loan demand really is the driver of bank stocks and bank earnings. So we see Jamie Dimon as a terrific CEO at the helm of this bank. The balance sheet is very strong and therefore very well capitalized. So we see the risk being relatively low here in terms of any problems. And the bank has made significant investments in technology across its platform for both consumer banking and for its asset management business, which I think is a little under the radar. So we see a lot of good value here for long term, looking at the next three to 5 years with a nice dividend and strong dividend growth.
Okay, let's go to Skyworks Solutions. You say it's well capitalized, and with consolidation in its particular area, it will either acquire or perhaps be acquired.
Right. Hi, Sue. The Skyworks is not one of your household names, perhaps. It's, as you say, it's a semiconductor company, and it's involved in the integration of wireless technology, particularly in the mobile side. One of its largest customers is Apple. So think of it this way. It's another way of playing, if you will, or participating in iPhone sales, but not directly through Apple, which has performed well. So this company is growing its top line, its sales, that is, at about 18% a year, and bottom line at 34%. So this is an attractive way of getting inside, if you will, into technology, into an $18 billion market cap company.
Finally, another bank. This one's a regional, though. Union Bank shares there in Virginia. Why this one?
Yes, Bill. Unlike the size of JPMorgan, this is a $1.5 billion market capitalization. Headquartered in Richmond, Virginia. It's the largest bank state in Virginia. We think Virginia has strong demographics, strong geographics. Earlier, they announced acquisition, just recently, rather, they announced acquisition of Zenith Bank shares, which gives them an inroad into the Hampton Roads market. And we do think regulatory reform will happen, and it will disproportionately benefit smaller banks like Union Bank shares. So we like it long term.
You know, you expect some pretty decent returns out of the 3 picks that you gave us. But how do you feel about the overall market, specifically as it pertains to valuation?
Yeah, well, we think the market is a bit expensive, if you will, on an earnings basis. We see it at least a full multiple or 1 times on a PE basis, more expensive than history. When we look out over the next 5 years or so, Sue, we see earnings growth in the 4.5% to 5% area. We see dividends tagging on, if you will, 2%. So again, this is U.S. So we see returns in the 7% area, which are certainly lower than the historic returns, which might be closer to 9 to 10%, and some of the big returns we've witnessed more recently, but still very attractive on a long-term basis, and particularly attractive relative to inflation.
Ernie, good job. Good to see you. Thank you for joining us tonight.
Thank you, Bill. Thank you, Sue. Happy Memorial Day.
You too.
And same to you.